Hello and welcome back to our Better Minds YouTube channel. So, in today's video, we will discuss about the changing dynamics of the macro and what has happened in past 1 to 2 days, and also discuss the impact of these macro changes on industries. So, let's start with the India macro. So, yesterday RBI has released its MPC minutes of the June meeting. So, in that meeting, what has transpired among the MPC member has been written on or comes into that document. So, basically, they have discussed about the rising inflation and the urgency to rate hikes. They have said that they will remain cautious on inflation front, and they are uncomfortable with the current inflation levels, and their focus will also be on growth, so that the growth will not get dampened. So they have they had withdraw their accommodative stance. So now they are more accommodative. They are more open to rate hikes, and most of the members has voted for the rate hikes. And obviously we know that inflation is very high, and last print is also above the RBI tolerance zone, 7.04. So basically RBI is tolerant, not very much tolerant above 6% level, and they are trying hard to bring that down. They have targeted at the end of FY23, I mean March to June, they expect that the inflation to come down significantly and into the tolerance zone. So it is well above 4% level where RBI is more comfortable, and since it's sticky from many months, 34 months has been passed from RBI tolerance level of 4%, and obviously it's above 6%. It has been more than 5 months, consecutive 5 months. So obviously it's a concern, and that was discussed in that MPC minute, and they have said that they will obviously raise a rate to bring down the real yield to the -1 zone, minus 1% zone. And in August meeting they will have the bi-monthly meeting. Obviously they will go for August meeting in coming months, and in that meeting they most probably raise rates, and obviously everybody expect that that will go above the pre-pandemic level of 5.15%. So that gave the insight what RBI is thinking about the inflation and how they are looking to tame that. And the second macro development, we will discuss about the global macro. Yesterday Fed chairman Jerome Powell has testified to Congress about the rising inflation in their economy and the impact of that on the real yields and all asset classes. So they have said that recession is not evident as of now. They are looking for more data, and they will come to the conclusion more after looking at those data that will come in the future. And but they are more certain about the inflation being a sticky, and that will remain for few months more. And they said that once the data comes, they will also try to change their stance, change their approach towards taming that inflation, and whatever that is needed, they will do that. That was the part of Jerome Powell's testimony to Congress. So these two macro events has happened yesterday, and today when we come today, we have seen that crude prices had fallen sharply, and from 125 level to below 110 dollar per barrel. It is a big macro thing that India is looking for, because India imports large part of the crudes, and it affects many industries and India's inflation. And second part is dollar index has picked out for the time being at 105. So that has come down to 104 level and below. Yesterday it has, day before yesterday it has gone down to 1.3.5, 103.5 levels. So basically what dollar index do is it helps in bringing the money to the emerging markets. And we also seen that the bond yields has also corrected in US significantly. So these things has positive impact on India's fund flow and India's inflation projections and all sort of things. So let's look at the impact of these macro variables change on the industry. First, we will discuss about the banking industry. We have seen that the banking industry, most of the loans, higher part of their loans are linked to repo. And since RBI's guidance in the MPC minute has been that they will raise rates further, so that is a good thing for banking industry, because that brings the pricing power to banking industry. And since pricing power, along with that, they will surely improve their NIMs in coming quarters. So that is a positive thing for banking industry. And we have seen that the banking leaders like HDFC Bank is management is more optimistic about the expansion plan and all sort of things. So obviously the industry's outlook is good as per them. They are going for aggressive banking and branch expansion. So let's come to the NBFC sector, the financial sector. Obviously there is cost pressure for them, and recent changes in the recognition of NPA has also dampened the outlook for the NBFC sector. But since cost of fund is most looked variable in financials, so from that point of view they are into some bad times for a few quarters. And then we come to the cyclical part of the industries like auto industry. Obviously auto industry headwinds has been picked out, but situation is not very normalized as of now due to semiconductor shortage and cost of ownership rising due to the interest rate hikes and crude oil prices. So then we'll look at the pharma industries. Pharma industries API's pain has been picked out, and since China has opened up, most of the raw material cost is likely to get normalized in coming quarters. So now we look at the FMCG sector. FMCG sector, obviously palm oil is a key ingredient there, and many other raw materials has been softened in recent months. So the sector margins pressure is likely to be picked out in this quarter or in coming quarters. So now let's look at the crude oil prices beneficiary, the softness in crude oil, which sector is likely to be impacted most. Mostly cement industry is very power and fuel intensive, so that is likely to get benefited from the current fall in the crude prices. And then there is a specialty chemicals. Most of the specialty chemicals and chemical industry use crude derivatives as their input. That is also likely to get benefited from the softness in the crude oil prices. Then we will look at the paint industries, that is also going to be benefited from the crude oil softness. So that's summing up on all sectors. The earning downgrade is likely to be for this quarter, or I mean June quarter or to September quarters. In this quarter we will see that how the margins has get dampened to how much extent. That will come to us from July 1st once the quarter end. So that will give more clear picture and visibility beyond that. So that's all from our side for today. Thank you.